Tumeenda.
Good evening, Edwin. How are you doing?
I'm very well, Michael. How was your day?
My day was good. We can't complain, especially from last week. Market has been fine.
Yes.
Yeah, so good evening, everybody. I hope you are all doing fine. So with me here is Edwin Wangai. We're going to cover a strategy where we are going to use MACD and moving averages. So both of them are indicators. It's simply a simple strategy where we are going to use two indicators to identify opportunities in the market. So first of all, I'm going to explain, or I'm going to define moving average, MACD, sorry. We understand what is a MACD. So the full name for MACD is a moving average convergence divergence. That is where we get the name MACD. So it's a technical indicator used by traders to show trend direction and momentum. So mostly we use it to serve two purposes. That is to know the direction of the market and even the momentum of the market. So the indicator has the following components. The first one being the MACD line, which will be the main line. Then we'll have the signal line. We'll also have a zero line, also called baseline. We'll also have a histogram. So mostly we are going to cover the following four components. They'll be the ones to show us some signals. So MACD line basically shows a relationship between two exponential moving averages. That is the 26 EMA and 12 EMA, calculated by subtracting 26 EMA from a 12 EMA. So as you can see, we are subtracting a slow moving average from a fast moving average. Then the difference, we get the MACD line. Signal line is a 9-period EMA of the MACD line. So basically, it's like MACD coming with its own moving average, which is a 9-period EMA. We also have baseline, which we also said you can call it a zero line. So that is where we have the zero value, horizontal line, mostly used to show momentum after crossover by MACD. I'll explain about that in the next slide, where we'll be able to see it. Again, we'll have a histogram. So it's a bar graph printing the difference between MACD and a signal line. So how you are able to get the histogram is by taking the MACD line, then you minus the signal line, and with that we are able, the graph now prints the histogram. We'll be able to see it at this point. So this is what I'm talking about. We have two graphs here. The first one is from MT5, or even sometimes MT4. This will be the kind of MACD that we'll be able to see on your chart. So with this MACD, you can see we have one line, and that is our signal line. And this is what we call the histogram. This kind of bars, you can see them being printed. And then we have the zero line, which is dotted at this point. That is where we have the zero value. So basically, I said that it measures the momentum. So we'll come to identify how you're able to know the momentum using the histogram and the baseline. Again, you can use this kind of a MACD, mostly if you're using a trading view chart. So it might be slightly different from the one in MetaTrader 5. So with the trading view, you have the two lines. That is the baseline. The blue one is actually the MACD line, and the red one is actually the signal line. And then we have our histogram here with the different colors. Whenever the histogram is above the zero line, we print the green candlesticks. And if it's deviating away from the MACD line, you have the strong green color. And if it's diverging back to the zero line or even the baseline, you now have the weak green color, showing the momentum is fading. And if you have a strong sell, like at this point at the end, you'll have the red bars on your histogram, the strong red, and then you'll have a faded red for weak cells. So those are the two indicators that you can use, the two different kinds, where you might use one in MT5 and even the other one on maybe a trading view. So how do you use this indicator? If you're using MACD, you are supposed to buy, or the buy conditions are when the MACD line is crossing above the signal line. So that is when you're supposed to buy. This is what I'm talking about. I said the blue line is our MACD line, and the orange one or the red one here is our signal line. So you're supposed to look for buys whenever we have the blue one crossing above the red one or even the orange one. And you can see at this point we had some good buys. So that is a buy condition for MACD line, for MACD. And then the MACD line should be crossing above the baseline. So it's considered a strong bullish move. Now that is where we bring in the momentum. So if the MACD line is crossing above the baseline, it's considered a strong bullish move at this point. So the MACD line and the signal line should be crossing above the MACD line, above the baseline. So it's considered a strong move, as you can see. And again, if it crosses below, we'll consider that in our sell signal. So again, histogram should be printing above and deviating away from the baseline for you to look for buys. So this is what we are talking about. So at this point, we had both the baseline, the signal line, not the baseline, sorry, the MACD line and the signal line above the baseline. And we had our histogram printing above the baseline and actually deviating away from the baseline. So that was considered a strong bullish move. So that is where we had a bullish momentum. So those are the conditions for buy. And for sell, we have the following conditions. You have the MACD line now crossing below the signal line. So this is what we're talking about. Now we have a crossover. So most of the time when you're dealing with moving averages, you'll have to consider crossovers. So here we had a crossover and our MACD line crossed below the signal line. So at that point, we started looking for sells. That is the first condition. And then we wanted to see the MACD line cross below the baseline to continue with our sells. As we can see at this area, the MACD line has already crossed below the baseline, and also the signal line closes below. So that was considered a strong sell or even a bearish market. Finally, the histogram should be printing below and deviating away from the baseline for sell conditions. So this is what we're talking about. You had those crossovers, and now our histogram was printing the red bars. I said we print the red bars when the histogram is below the baseline. So that was another condition to confirm that it's a bearish market, and the bars should be forming and deviating away from the baseline. So that is how you should look, or you should use the MACD. These are the three buy conditions you should consider, or else you should consider these three conditions for a sell market. So in short, the MACD can show you direction and again momentum. So those are two purposes served by one indicator. We are going to add another one, which is our moving averages. So moving average, basically it's a technical indicator that smoothens out price data by creating a constantly updated average prices. So it's dynamic, it keeps on following the prices and updating every now and then. So the average prices are from a specified period of time. So hence a trader can set any desired period they wish. Example, you can use a 50 period moving average, commonly used. So you set any period you want, 20 period, 10 period, 50 period, whichever you want to get the average prices. So as I said, it acts as a dynamic support and resistance. It keeps on adjusting, following the prices, updating every now and then. So it's dynamic support and resistance. And with that, it means that if it's acting as a dynamic support, If the moving average appears below the price, it's considered as a bullish market. So this is the condition or the example that we have given here. So the prices are above the moving average. So the red line here is our moving average. The prices are above the moving averages, and we can see candlesticks are forming and deviating away from the moving average. So at that point, we consider our moving average as a dynamic support. Hence, we should focus with buys at these areas. And we can see we had some good buys from this point. Again, you can use moving average as a dynamic resistance. So if it appears above the price, then it's considered a bearish market. So as you can see, we had a crossover here. So we had prices now closing and even closing below the moving average. At that point, we were supposed now to consider or even to focus with sales. And we can see after this crossover, we had some good sales. So this is a 4-hour time frame, meaning for us for a number of days, we had sales in this market. So basically, moving average should show you the direction. That is why we also call it a trend indicator. So at this point, it showed you that we might have a probability of a bullish momentum continuation, an uptrend. And at this point, we had a bearish momentum continuation. That is a downtrend. So I think that is it. That is how we are going to use that strategy or even those indicators. We're going to use moving average to identify the direction. We're also going to use MACD to confirm the direction still and also show us the momentum. So Edwin, I would like you to take us from there.
All right. Thank you for that clear explanation. Michael, I hope you can hear me from your side.
Yes,
I'm having issues with my headphones. Am I clear?
Yeah. Yes, you're clear.
All right.
Yeah, thank you.
So, yeah, so as you have explained, we are trying to trade a setup where we would get a confirmation both from moving average convergence divergence reaction alongside how price action would be reacting against 50-period exponential moving average. So the time frame is 1-hour charts. So it works best when there's a prolonged trend. So that's when you're likely to catch potential setups for price continuation in line with the prevailing trend. So those are the best circumstances under which you'd be able to use this setup. Either way, you can still find quality setups even when you don't have a very good trend. Otherwise, if you have a trend, then that would be the best case scenario. So for us to buy, we are basically waiting for the two lines of moving average convergence divergence to cross over and begin to rise. So when these two lines begin to rise after crossing over, you're waiting until the histogram would start to print on the upper side of a zero line or the center line. So that is the first trigger that you'd want to have. Whilst that is happening, you'd also want to have a case in point where the price action has moved above 50-period moving average. So when you have those two triggers aligning on an hourly chart, then that would be a good setup for you to buy. The sell conditions or the sell setup would constitute a case where signal line and MACD line have intersected above zero line, and once they begin to drift downwards, you'd wait until histogram would start to print on the lower side of zero line. When that is happening, you'd also want to have a case where candlesticks have crossed below 50 period. In some cases, you might have a retest along 50 period if it's a continuation. So once the market retests a 50 period, and at the same time get those the two lines of moving average convergence divergence intersecting above zero line, and you wait for the histogram to start to print on the lower side of zero line, then that is the kind of setup that you'd want to have in order for you to sell. In order to make this clear, is there any other slide, Michael?
Yes, Edwin.
Just try to move to the next slide. Yeah, so this is the kind of picture. Yeah, this is the kind of picture that you'd have. So you can clearly see the areas marked with a vertical line. So like this is an example of a buy setup. So this is the MACD that you'd get on MT4. However, if you're using MT4, you can still manage to download traditional MACD. So on Google, if you can search traditional MACD download, you can be able to get that indicator. So you'll just have to download that file, then you embed it on your MT4, and you'll be able to have the traditional MACD. So traditional MACD has both signal line and MACD line, but the one that is available on MT4 by default just has one line, which is the signal line. So in most cases, traders look for cases where you'd have MACD beginning to deviate from the histogram, and once it starts to rise to cross zero line, and at the same time have histogram beginning to cascade above zero line, then that is the point at which you're likely to have an accelerating momentum on your price action, or that is where you'd have price beginning to move towards the upper side of the market. This is an example of a sell setup. So at this point, you'd be able to see that price would move below 50 period, retest 50 and begin to drift lower. Whilst that is happening, you'd be able to see that prior to that, the signal line had deviated away from the histogram. And as the histogram began to wear off or wear out, and it dropped and leaned towards the center line or the zero line. So when it began to form on the lower side of zero line, then that is where the momentum to the downside began. So basically, you'd be trying to catch this kind of movement. And for the first setup, this is the kind of movement that you'll be trying to tap into. So this first setup is a buy. The second one is a sell. The third one is a sell. It's a continuation of the prevailing downtrend. And the last one is a buy setup. So I think we can now jump into the MT4 platform to have a look at a few setups which could have obtained towards the end of last week. So towards the end of last week, we had very nice setups. Would you make me the host, Michael?
Yeah, you can try sharing. Try to share.
All right. Tell me when you can see my platform.
Okay, yeah, it's visible on my side.
Yes. So towards the end of last week, there were very nice setups. So the first one was on pound against the dollar. So generally, from 10th of May, a pound dollar has been on a progressive downward trend. So on 30th, that's when actually from 26th, rather from 25th of last month. So I'm talking about that period. So from that day up towards the end of May, price was generally within a range. So it's at this point where we had the first trigger. So price jolted above 50 period. So this is our 50 period exponential moving average. So price would rise above a 50 period exponential moving average. Whilst that was happening, if you look at how moving average convergence divergence was reacting, you can clearly see that the MACD line and the signal line had risen quite sharply on 26th of May, and they were generally riding along the center line or along zero line. So zero line is this imaginary line which is demarcating periods within which you'd have the market bearish, and when you have bullish markets. So it's at this point where we had the two lines beginning to rise above zero line. And as that was happening, we can clearly see that price action was indicating the start of a bullish market. So this kind of confluence is what we would seek. So you'd have the two lines intersecting and rising above zero line. And once the histogram begins to build on the upper side of zero line, and at the same time have a price generally above 50 periods and deviating above 50 periods, then that is the kind of setup that you'd want to have. So within this period, it could have been an ideal period to be in a buy position. Of course, as we always insist, you should always ensure that the technicals are aligning with fundamentals. So once you get a good technical setup, just ensure that you don't have any pending news that is likely to affect any asset which you could be trading. So if you are to take a buy with it, you'd be trying to tap into. So this was a 100, close to 170 pips range. So the entry for this setup 0, and this was the exit. So this was roughly 143 pips. So this was a good setup to take. So that is the trade. Then the second trade was US oil. So this was a continuation. So price was generally on a downward momentum from 24th of May. So you'd have price dropping, rising to retest that trend line, as well as 50 period moving average. So 50 period was giving us dynamic resistance zone along that downtrend. So it's at this point that would have a price retesting the trend line and 50 period exponential moving average. So when it drifted below a 50 period moving average, you'd also be able to see that we had gotten a confirmation of a prevailing downward momentum based on how our moving average convergence divergence was reacting. So the signal line and the MACD line had intersected above zero line, and they began to drift lower. So they were generally dropping below the center line. And if you look at the histogram, it was actually printing on the lower side of zero line. So within this period, it could have been safe to execute a sell position. And this is a kind of momentum that you'd be trying to tap into. So this was a massive 500 pips. So a 500 pips range would be big enough for you to make something out of. So that was the entry point and that was the exit. So this was roughly 70 pips. So it yielded around $70 if you had taken a mini contract. Then the last opportunity was UK oil. It was more or less the same as US oil setup. Price was generally on a downtrend. Would then have a retest. Price would drop below 50 period exponential moving average. The two lines had intersected above. They were drifting downwards. If you look at the reaction of the histogram, you'd be able to see that right from this point, the histogram was printing towards the lower side of zero line. So having that alignment, then it could have been an ideal time to consider trading a continuation of that momentum. So right from that candle, you'd have price dropping by around close to 500 pips. So that again was a nice setup to consider. So the entry was 75.45, exit at 73.95. So that trade yielded 150 pips. For a mini contract, 150 would give you around $150 on that trade. So those were the few setups which I was able to identify in the recent past. And I think that's pretty much it.
Yeah, those were nice
From my
setups.
side. Yes.
Yeah, so those were nice setups. And I think that's it also on my side.
Yes.
Yeah, so you have a nice evening.
All right. Just to mention, for those of you who might be interested in our physical trainings, our training starts on Monday. So you can either attend at 1 p.m. Make sure that you are at any of our offices at 1 p.m. Or if you're not available at 1 p.m., you can as well try 4 p.m. Ensure that you are at any of our satellite offices at 4 p.m. So they start on Monday. So I'd highly recommend you to start on Monday so that you can have the flow through the week. So it's from Monday to Friday. And yeah, so to find out the closest office, you can go to F in order to assist you. So with that, we come to the end of our session today. We hope you've been able to learn something and you'll put it into good use. And yeah, so I wish you all a very pleasant evening, and I look forward to meeting you this coming Wednesday.
All right, thank you.
Also, tomorrow we have a session. So from Monday to Thursday, we usually have market snapshots. So these are 15 minutes analysis sessions by our market analysts. So ensure that you subscribe to the FX Pesa YouTube page in order to receive notifications before the session begins. Again, at 4 p.m., we'll have another session. So once you subscribe to our FX Pesa channel, you'll be able to receive all these notifications as long as you are online. And that's basically it. So I wish you all a very pleasant evening. So see you soon.